Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning, good Monday morning. Spent some time away from the screens over the weekend. Great to see everybody. All right, so let's go ahead and dive into what we've got coming up this week. And by far, the most important hot zone is likely to be the FOMC meeting minutes. We have probably a little bit more of an aftermath of CPI and PPI kind of making its way through what's going on in August. And let me just bring this up here really quickly here. And this is, what is it that we tend to see in August? And I don't mean going back 30 years or even 20 years. Over the last 5 years, where the monetary policy has largely been accommodative, what have we seen in August? So we can just kind of highlight August here really easily. We'll go August 1 to September 1. And that's it, right? Over the last 5 years, those are the seasonal trends in August. Now, I both detrend these because remember, if you look at a logarithmic chart of the indices, the game is skewed to the upside, right? If no one's ever said that clearly before, the game is skewed to the upside. When you look at the indices, think of it this way. Anytime there's a rebalancing, anytime there's a reshuffle, other than that NASDAQ reweighting, which really did not change the nature of the NASDAQ, those heavily weighted stocks are still those heavily weighted stocks. They're just less heavy, right? So when we take a look at the overall markets, we tend to do what? In the indices, we put the new, we put the strong, we put the uptrends, and what gets removed? Weaker stocks. So it is skewed to the upside. And ultimately, that doesn't mean that every month is going to be up, or nor that every year. But overall, if I were to do anything and look at it mapping out to success over years, if not decades, there's a reason we still talk about buy the dip. Now, does that apply to August? I think what applies to August is thinking about what time frame we want to buy the dip, if at all. I think August is going to be about what time frame we even look for setups. Shortening the time frame, not just in August, but for the remainder of the year, is probably going to be really important, because if you kind of open up, let's go out to all of September. Things can get pretty squirrely as we go out. So as bearish as I hear folks get in August, September over the last 5 years has been tricky. Remember, though, the one thing that overrides all of these tendencies, the one thing that, especially in something that isn't planted, grown, harvested, transported, stored, is monetary policy is going to eclipse all of these tendencies. Tendencies are not trade. So anyways, that's what's on my mind here this morning. I hear there's a lot of bearishness in the financial Twitter land, or whatever that thing is called now. A lot of bearish talk. Yeah, we're in kind of this choppy range. We're bouncing around in a number of places between resistance and support, but not necessarily going anywhere low enough to be a downtrend, and certainly not strong enough to keep the trend that was alive in July. Remember, gang, July is an interesting month. Historically, it's a very strong bullish month. So July was great, but if we don't shift from what we did in July, in other words, what we did in July, who cares? That was last month. It's a completely different strategy for August, and that's where a lot of traders are getting hurt. The strategy isn't new secret squiggles and brand new strategies. The strategy is shorten the time frame, right? Shorten the time frame. That is the mantra probably for August and likely going into the remainder of the year. But it's not that bad in terms of weak everywhere. What has been outperforming? This is the heart of what we do in the Sector Secrets Mastery. What is outperforming? Which stocks, which sectors, therefore which indices? And the Dow is actually the relative outperformer right now. We've got very nice trends in energy. We've had very persistent strength in things like communication, We've had persistent strength in a number of places broadly, oil and gas explorers. So remember, please don't paint. This is what new traders tend to panic. Why? Because we're new at that stage in our career. Please remember that new traders tend to paint the entire market with one brush. Tech is not the only brush out there, gang. Please keep that in mind. Let's jump into the question, shall we? All right, so that's a quick 5-minute rundown of what I've got on my radar, what's working right now. We've had a number of things working really well for short-term swings this last week, from, Johnson & Johnson, oil and gas explorers, to communication. So there are corners of tech that are just fine, right? We've just got to be more discerning, okay? All right, let's jump into it. Yeah, hey there, Mind the Gap. How do I feel about oil? Yeah, so it's never how I feel, although I can appreciate the question. It's what I see. It's not even what I think. It's not what I feel. It's what I see. And I know you know that. But let's keep in mind, it really does map to, let me grab my drawing tools here. It really does map to the sequence that I teach everyone, whether that's day trading or swing trading. What's the sequence? Start at the bottom, start at the floor, start at the foundation, and it's green grab candles. So I definitely want to be buying in the daily price movement range. That's going to be probably superior to price-based mean reversions. Remember, gang, anytime we're looking at a mean reversion, most of the time it's a moving average, which is price-based. In this environment, and we've been doing this for most of the year, we've prioritized volatility levels, we prioritized volume levels, VWAPs, anchored VWAPs, daily price movement ranges, that study of historical volatility. So that's really what's working. So that's what I see. And XLE, nice uptrend. We have a position in XOP. That's a pretty darn good uptrend. And XOP, for my naughty gas fans out there, XOP is a great way to sort of coattail what's happening in FCG with more liquidity, right? So we've been setting this one up for a bit. We're going to continue to try to grab a piece of XOP. I love this one. I think we're going to probably shorten the time frame and see if we can't get a 1-hour fill. So definitely put this on the radar. XOP, XLE, and crude oil itself, right? We definitely want a piece of this. Yeah, we definitely want to jump on, put a quarter in the ride, so to speak. And that would include crude oil itself. And crude oil really is the ringleader. As long as crude's heading higher, that organization around oil and gas services, actually, I will say this hesitantly, those stocks are probably going to do fine as long as oil does not get crushed, right? As long as oil does not get crushed. All right. So one of the things I want to do is, well, let's do this. For XLE, and again, if we think about the process, kind of going back, mind the gap. Remember, XLE is what? It's more attached to the Dow. So YMDIA, and then think about Exxon, think about Chevron. And this is where a lot of traders don't necessarily go through the process that they frankly should. We all tend to have favorite stocks. We all tend to have favorite markets or even favorite indicators. But sticking with our favorites is like loving our 7-iron in the bag, and that's the club we grab every time. It's good for a lot of things, but it's not good for everything. Yet a lot of traders just go through all of their trading life, all 18 holes, with their 7-iron or with their driver, whatever their favorite club is. And I think that applies to indicators and symbols. If we can't say, I love trading this particular symbol, but right now, this is the relative outperformer, we're oftentimes going to be in a lot of trouble. All right. Okay. So what else do we have here? Let's go jump on over to, I do want to mention another thing. We talked about this in the 1 hour, on the Friday video on the 1 hour and the importance of the 1 hour. So a lot of folks might be saying, Rog, are you not open to shorts? Oh gosh, yes, I am. But let's go back to what I mentioned earlier, which is shorten the time frame. If we can shorten the time frame, we don't have to stay glued to the daily time frame looking for follow through over the course of 2 to 10 days, which is sort of what I'll calibrate to in a daily time frame. The 1 hour gives us sort of the best of a lot of worlds, which is I have a little bit more activity. Let's face it, we're traders, we want activity. Gives us opportunity, activity, but it also gives us more sensitive reads to the underlying market structure. So if you're using the multi-trend, you can see the multi-trend at the bottom of this chart, these two rows of colors, momentum, trend is the bottom. As long as this thing's red, I can focus on the resistance of these gold zones. I can focus on the resistance of a 200 propulsion. There's a lot we can do with the foundational tools that I use on my chart. They're already there. They're already being plotted. The trick is to know when I want to be shorting at resistance, when I want to be buying at support, and the multi-trend answers that. So what ultimately, whether I shorten that time frame to the 1 hour to take advantage of, say, 1 to 3 days of follow through, or what's been working really, really well is just, gang, I don't mean hyperactive, in and out. I mean day trade, find a relative outperforming trend on a 5-minute time frame and take that for the morning, or sometimes take that for the entire session. Day trading continues to work. There's a reason why so many traders love day trading. It's not just because we want to sling contracts, but it's the desire to have control over our exposure to the market. And in the exposure is the risk. I mean, think about that. The only thing that day trading really means is that I'm going to be flat by the end of the day. That's it. What we do inside of that is where all the different strategies come in. So keep that 5-minute in mind. You know, as much as I love the 1 hour, I think that's going to be a really good time frame to focus on from what we're seeing. And from what we're doing, the day trading continues to outperform. And it gives us so much better sort of granular control over, hey, what's happening this morning? What's happening this afternoon? And then clean slate, right? And we start all over again. And there's a lot of freedom and good sleep in that. All right, Robert asked, thoughts on XLY? Is this a viable dip yet, or should I wait? So Robert, let's think about NASDAQ, because that's where XLY comes into focus most. And if I take a look at the NASDAQ, what I have is XLK, XLY, XLC, XLY. So this is your Amazon. This is your Tesla. I don't know that I love, I don't know what I typed in there. There we go. I don't know that I love what I'm seeing on XLY. It's an uptrend, right? It's been a pretty good uptrend. Here, let's take a look at the daily together. It's been a pretty darn good uptrend for some time. But as you can see, as we went into August, things started to get really shaky. And why did they get shaky? We'll take a peek. Amazon, no problem. So if you ask me, Raghee, where's our relative outperformance? Do you see where I'm going with this? Right? Do you see where I'm going with this? This is really important. This is where, again, a lot of traders get into trouble. Not that that's anywhere where you are, but my friend, if I'm going to look at the sector, look at the stocks, look at the tide, look at the boats, however you want to slice that. So no on XLY. Now, I think there are better outperformers within this world. And I showed you this one of them right there. So if we're going to look at a stock within XLY, let it be Amazon. We got earnings in the rearview mirror. It's a relative outperformer, right? Not all of tech is melting down, gang. For as much as a lot of traders want to say, oh, tech is, yeah, it's not making higher highs anymore, right? This is a fact. But we are waiting for movement to the lower end of the range, with some nice confirmation, and we'll continue to look for opportunities in those zones. I think Google's another great one. This would be a great corner of the XLC, right? So this is the watch list building, gang. So if this kind of stuff is new, this is what we do in the mastery. This is what Sector Secrets is. This is the not so secret of Sector Secrets. All right, so questions. If you have any symbols, type them on in, gang. We'll continue to march through these charts together. I got to tell you, financials are still a very interesting corner of the overall market. It's a very interesting part of why the Dow continues to outperform the S&P and the NASDAQ. So here's the Dow. Here's energy. Here's financial. Here's healthcare. Healthcare is obviously not in an uptrend. I say obviously because if you can look at the bottom of this chart and that lower row of colors, it's yellow. Yellow means neutral. However, buying the daily price movement range has been working. And gang, I'll tell you right now, I'm giving you a lot of great symbols to focus on here. These are the kind of setups that we've been taking advantage of and frankly winning with. Take a look at Johnson & Johnson. All right. So I want to leave you with some really good ideas here for as we kick off the week. All right. And I should mention, if you want to check out what we're doing, if you say, Rog, yeah, these are really interesting. The process, I've never done it this way before, right? I usually have a watch list and it's based on what's gapping up today or gapping down today or my favorite symbol. Nothing wrong with that, right? But think about relative performance, which means every morning you're grabbing the best movers today, not things that are gapping up. That's almost like it's already happened, right? Good for whoever was in it, but it's already happened. So check out sectorsecrets.com, super simple URL. sectorsecrets.com. You can see what it is we're doing in the room. All right. So as we wrap up, probably one of the most important two symbols I get a lot of questions about, although they're not necessarily tradable as of yet, is what's next, the dollar, what's next for bonds. Gang, bonds are in a downtrend now. Whether you're looking at the long bond or whether you're looking at the 10-year, they're in a downtrend. Downtrend in bonds means higher yields. So clearly bond traders are saying something about what it is the Federal Reserve is doing right now. They disagree. It's always a game of chicken. Bonds love to play a game of chicken with the Federal Reserve. Kind of a you're wrong and we're going to start to discount the narrative. Nonetheless, we can climb in a rising yield environment. I mean, the last 8 months have proven that. However, I don't want to see rising yields and a exceedingly strong US dollar. So keeping an eye on 6E this week is going to be pretty important. We have FOMC meeting minutes. 6E is coming down to the anchored VWAP as well as a long-standing Darvis support level. This is where if 6E is going to make a stand and the US dollar is going to find a ceiling, this is where it's going to happen. So keep a really close eye on this as well. All right. I'm hoping that this week gives you a lot of ideas to start off with. And when you say, yeah, this is working for me, come check out what we're doing in the mastery. We do this every single day. So I'm in the mastery, by the way, gang, 9:20 to about 11:20 every single morning. And then some days we come back for an afternoon session. We do that twice a week. All right. So if you haven't checked it out, please do. What about X? Sure. So X is very much a part of the XME, which we have been looking at. I've been looking at FCX a little bit more than X, my friends. So nothing wrong with X. It is starting to look a little oversold. I'd love to see a gap close, which we've got, and a minor low. I'd say keep an eye on 22. Yeah, I mean, take a look at where we're going to open up at. Are we going to open up that high today? Hang on one sec. You want to see a minor low potentially here? Oh gosh, yeah. So it's made a huge move, right? Am I missing something here? Yeah, so nothing on X today. Remember, gang, if it's already made a big move, not necessarily something that I can do anything with. Freeport-McMoRan continues to be very interesting, though. And the other one was CSX. Sure. So when we take a look at transports, when we take a look at industrials, there are better looks in the Dow. There are better places to look in this corner of the world in transports. And I would open up XLI and IYT, my friend, and do that relative performance scan. Yeah. All right. So that is the move. So again, please, this is not what I'm going to trade today. This is what I mean by, okay, it's had a big move. If someone was already in it, great, but I'm not going to do anything with it today until things settle down. All right, gang. I'll see you all in the Sector Secrets Master Room. I'm also doing the open in the options room this morning. So I'll see you all there. Be good to each other. Same time, same station tomorrow.